Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm trying to get you what you need to know before you go, so let's get on with some economic data. Then we'll talk about the markets. Finally, wrap it up with some option strategies that I think we can implement into a portfolio based on those assumptions we come up with. All right, so across the pond, we got some economic data. It was the zoo economic sentiment, really a real good gauge of economic the way that the folks in the economy are feeling about what's going on. And this sentiment came in lower than expected. Remember, anything below 50 is going to be contraction here. And we got 48.6 expected to be 54.4. So that was a big miss on that headline number. If you look at German economic sentiment number coming in at 54.3, in line with the 55. So at least that number coming in above the 50 threshold there. Later on this afternoon, we're going to be getting that PPI. Remember, that is producer price index. That's going to be a gauge as to how the manufacturer is feeling on the inflationary front. They're going to be gauging what the prices are that they're paying over what it used to be, or under. We're probably not going to see anything under. Something to note, though, going forward here, folks. We heard Bullard talking yesterday. He's one of the Fed governors that has been speaking recently, and one of the big talking heads of the Fed, really. Something to note with what he was saying, didn't pull back from his 50 rhetoric that really caused the slide in the overall markets, talking about really ramping up the interest rate increase. Now, there's something to keep in mind here. There's a lot of folks out there saying the levers and pulleys of the markets are that we have inflation, the Fed's behind the curve, they've got to raise interest rates because they got to catch up with that inflationary gauge. Now, rewind a little bit, maybe back about a year right now, we were talking about transitory inflation. When is that inflationary pressure going to start ebbing for that transitory aspect? That is expected to start coming around the corner here in March, April, coming into the summer. Now, with that, we have a huge supply that was backed up coming into the United States. Remember, we were all laughing at Christmas around those cargo ships that were out in the ocean just waiting to unload. Now all of those trucks are basically unloading, folks, and that is a huge supply coming into the markets. A lot of that stuff was expected to be here for Christmas, didn't make it. So now they are not going to be able to move that inventory throughout the summer because that's going to be a lull. All right. So prices are probably going to have to come off in order to move that inventory. I think that's where we're going to start seeing some of these inflationary pressures start to come off. Now, with that said, that's the timing of the Fed rate hikes. So are they going to totally plan this out correctly? Bullard saying 50 in March. I don't think we're going to see 50. I think it's going to be a 25 basis point move, and they're going to go incrementally at that rate. A 50 basis point move is really painful for folks to really deal with. Hedging, all of those things are very difficult when interest rates are moving that fast, especially for the big banks that need to offload massive amounts to hedge their portfolio. If you think about this, we're always talking about the Fed funds. The Fed fund is a $5 million contract value. Face value, it's worth $5 million. That's when these companies are doing 1,000 lots, folks. That is moving and hedging a lot of money. So when we're talking 50 basis point moves, it makes it very difficult for these banks to offload that kind of hedge in those volatile markets. We're thinking one full point on a one lot, one full tick in 30-day Fed funds is $41.67. It's the largest full tick out there on the futures. So it is could be a bit painful there. All right, so let's get on with the overall markets. Enough about that. Let's talk about crude oil. You can see we got a lot of confirmations yesterday on market pivots or pattern reversals. Markets being in a bullish move, getting a pattern reversal to the downside, as we can see here in the crude oil futures. Nice topping pattern here, and then confirmation closing. We'd like to really see this close out below the wick, but that's a pretty darn good candle for a confirmation there. I would say risk is to the downside here in crude oil moving forward. Bonds, there's no upside here, folks. And I've been talking about this for about 2 years about the increased interest rates and how we needed to start getting ahead of this by doing some covered call strategies, because interest rates are not going to go lower you're only going to really go higher. And if interest rates are going higher, that means bonds are going down. And that's the perfect hedge for a market that you know is not going to go up. It's covered calls there. All right. Gold futures, after the last couple of days of big moves to the upside, we are starting to look like we want to stay inside of this trend channel here. And of course, I pull up my Fibonacci. Get rid of that. Anyway, we've got this nice move up there and a engulfing candle here. Yeah, that is a topping pattern, but we also got an engulfing candle right next to it, which is very bearish. So I would say risk is to the downside in gold, despite the fact that I think that folks are wanting to put some money to work with safe haven assets. That being said, rolling out of equities into something like gold, I think is still going to be something enticing for folks. All right. Bitcoin making a move. Are folks rolling out of gold and into Bitcoin, out of Bitcoin and into gold? It seems like that is the case these days, rather than them running kind of in tandem. But a bottoming pattern here and a move above the 50-day simple moving average, at least as of right now. A settlement above that would definitely lead one to believe that we are looking at 50,000 again in Bitcoin. So risk is to the upside today in Bitcoin. VIX is coming off a little bit. That's because we're getting a nice move here on the pivots in equities as well. We got NASDAQ making a nice move and trying to make back its way to those trend channels from 2017. Nice move to the upside, looking like we're going to go back to the point of control there. Now, with that said, we saw more of an exacerbated, overdone move there in the NASDAQ, which we were expecting. I talked about this well before this all happened, that the NASDAQ had to move to the upside. It was going to correct a little bit more to the downside. That has all come back around. That's what we're seeing. We saw the NASDAQ overcorrect here and a move back to the upside. Dow Jones, E-mini S&Ps looking like they are already back to their points of control. So are they going to make the type of move we see to the upside like NASDAQ? NASDAQ has more room, folks. It's going to make its way back to the point of control. And now we could also start to see the E-mini S&Ps and the Dow Jones start to lag a little bit here as folks are looking for values in the tech sector, because that got oversold. Those valuations came way down. Now folks are looking for opportunities or looking for good valuation metrics in order to start investing in. That's going to give a little bit of a buoyancy there to the NASDAQ, while the E-mini S&Ps would probably start to struggle in that kind of environment. You can see over yesterday, pretty sloppy market. Everybody really just reeling on information we're going to be getting from the Fed governors as to what they expect to be happening going forward. I think that we're going to start seeing a lot of different ideas coming out. Most likely, we're going to go to the more conservative side, and that's the 25 basis point move going forward. And that's what I'm looking for in that. So look for a bit of a tantrum. If folks start saying 50 versus 25, that is going to be more bearish for the equities because of that struggle. All right, that's all I got for you guys. Hope that helps you out in your trading day. Don't forget to smash that like button. I see a couple of you already hit that. Appreciate that. And comment, because I will circle back around, make sure everybody's clear of concept. And we've got a subscribe button there. Everybody knows the subscribe button, but what they don't know is there's a bell right next to it. That will tell you when I come in here unannounced. So you'll get a heads up. Hey, Wolfman's talking, and you'll know. All right. So that's how it works. If you didn't take that, take it easy. Bye for now.